How is this bull market different to prior cycles? Let's have a look at some on-chain metrics most people aren't looking at. Let's look at average cost basis. Let's look at what point in time Bitcoin might be cheap. Let's try to figure out how healthy this current rally actually is. Let's start off with how much we typically see the price correct during a bull run. So we've got the move from 2012 to 2014. We've got the move from 2015 to 2018. We've also got the rally from 2019 to 2022. And now the current bull market starting at the end of 2022. Now what we see here at the top are the percent drop downs. So the y-axis on the right shows the percentages. And of course, in the early days when Bitcoin was just a few dollars, there was way more volatility in the price. And even during a bull market, we could correct more than 60%. The second bull run though was way more smooth. We never saw drawdowns above 40%. And it looks like now the volatility is coming back again, potentially because Bitcoin matures over time, is not rising that quickly anymore. And because it can't appreciate that much anymore, any sell-off event depresses the price, relatively speaking, quite a lot. That's at least how I explain how the drawdowns in the last bull run were larger compared to the ones from 2015 to 2018. We saw the COVID crash, but we also saw the correction after Elon Musk started selling. And so here we are in the current bull run, still in line what we have seen in 2018. But actually, I would not be surprised to see something very similar to the green cycle here. We might still be in a bull market, but seeing 50% drops from the top, I believe is very much possible. Let me show you why I think so. This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below. But first, let's have a look at the short term. Currently, we see a pretty tight trading range, and it seems like the short-term holders are dictating the price. Sometimes short-term holders are in losses, sometimes in profit, and we seem to be oscillating around the average cost basis of those short-term holders. Check this out. This is the short-term holder market value to realized value indicator, and it also shows when the short-term holder demand might be somewhat exhausted. So the short-term holder realized price is in blue, and it gives us a good reference point of where we might be currently at. Now at the recent point of where we might be currently at. Now recently we tend to be rather in losses with short-term holders. Yes, some dips get bought, but we don't really get into the profit. And I think the reason for this is the overarching long-term trend. Now there are several long-term indicators and we'll go through some of them. What we see over here are somewhat aggressive indicators, so the true market mean and the active investor price. And whenever we are below, it makes at least long-term sense to buy. Whenever we are above, it might make sense to sometimes take profit. And we are above that level since beginning of the year. Now the issue with using this metric is that we can still fall easily 30, 40, 50% once we are below. And so I like a more conservative approach. I like the overall realized price. Whenever Bitcoin is below, it is a very good time historically to dollar cost average in very aggressively. Over here, Bitcoin was around 3K, then it went up all the way to 11K, then down to 5K again, then up to 60K, then down to 16K, then up to 72K. So there's a clear multiple X return whenever we are below the average cost basis of the market, whenever we are below the realized price. Now currently that realized price is at 32,000. So we are very far away from being extremely cheap. That being said, it doesn't mean we can never get there, right? We have seen drawdowns like this during prior bull markets as well. The current bull market is comparatively calm. There's an even more conservative approach. and that's to look at the long-term holder average cost basis. So we don't look at the entire market, we only look at the long-term holders, and that tends to be a line that's even lower. And at the end of the bear market, we also tended to be below that line. Now in the COVID crash, we didn't quite hit it, but in any other case we did. And so that price is currently at $25,000. Now, I'm not saying that we're going to crash down to 25K because this level is also increasing somewhat, but it gives us a range of potential risk, right? If suddenly things were to blow up left and right again, because sometimes those events happen completely unexpected, like we had with the Terra Luna collapse over here or with the FTX collapse over here. Who would have thought that Terra Luna, one of the largest DeFi platforms, goes bust while Bitcoin is close to its all-time high? And so it appears again that the short-term holders are currently dictating the price. We see here how many Bitcoin have been moved for what kind of price, and we're pretty much in the middle of the cost basis of the active supply. The lower end is at around 53K. The upper end, of course, is close to the all-time high. And whenever those long-term holders sell, then those bars here go down, those bars here go up. But at the moment, it really doesn't look like the long-term holders are selling. What we've got over here is the value days destroyed. I very much like to look at this indicator. This looks at what are the whales that tend to never move their Bitcoin. What are they doing? Are they suddenly moving their Bitcoin? When they do, this spikes up, and that's when I personally get cautious. This did spike in the middle of March of this year. That's also why I sold some of my Bitcoin over here. Currently though, that's very, very low. So the long-term holders aren't doing anything. The price is really dictated by the short-term holders. And so maybe it makes sense to rather focus on the short-term realized price than being too concerned about the long-term holders still having a very low cost basis. It appears as if the long-term holders don't want to sell for that price. They want to see new all-time highs. They tend to sell whenever Bitcoin tends to be high as well. Feel free to subscribe. I publish videos like this regularly. Feel free to also give this video a like. It helps the channel grow. If you've got Telegram, then check out the link down below. It's 100% free. Looking very much forward to chatting with you.